Your mortgage guy Brian here, and today's topic is something that's coming up a lot in a lot of my conversations with first-time home buyers. And it's a conversation about something called a mortgage escrow. So for those of you who are not familiar with what an escrow account is it is a separate account to go along with your mortgage in which the mortgage servicer will be able to pay for your property taxes and your homeowner's insurance. In order for them to do this, you will be paying a small amount every single month so that when the time comes for your property taxes to be due, they will have the ability to make that payment. Same thing with your homeowner's insurance. Every year when it comes due, they'll have the money set aside for you to make that payment. Now, there are a lot of positives to this, and there are also some perceived negatives to this. So in today's video, I'm not telling you whether you should or should not escrow your taxes and insurance. I just want to make you aware of some of the positives of doing so and maybe some of the cons of doing so. All right, so let's first start off with the pros. One, it's automatic. Every 6 months, your property taxes are going to be due, roughly every 6 months. It depends on the community in which you live in. But when you get that bill, you are going to get a bill for a large payment. And for a lot of people, coming up with that money is like a kind of catch you off guard moment. So by putting your money in an escrow account and making small payments towards that property tax every single month, it's automatic. You don't have to worry about it. It's forced savings for your property taxes and homeowners insurance. Number two, you're covered. If, for instance, you do not have the money to make the payment for the property taxes, guess what? Your mortgage servicer is going to make that payment. Even if your property taxes have gone up above what they expected, they will still make that payment on time. And then they're going to work with you, the borrower, to come up with a plan to cover the difference. Whether that mean an upfront payment directly to them or restructuring your escrow payment in order to compensate and come back to an even point. Number three, there are no surprises. Every single month, you know exactly what you're paying towards your mortgage escrow, and it's not going to change unless there's a change to your policy, unless there's a change to your property taxes. But every single month, you know exactly what you're going to be paying to make sure that you have enough money to pay your property taxes and insurance. And the final one is it can and sometimes often does have an impact on your interest rate. Since you are essentially giving more money to the investor, they will have more money that they will be getting interest off of, and therefore they will incentivize you to do that by giving you a slightly lower rate. I have seen this vary in amounts. It could be as little as maybe 1/8%, or maybe as high as 0.5%, depending on your loan size, etc., and other factors. Now, why wouldn't you want to do this, right? It's automatic, it removes surprises, and you possibly get a lower rate. Now, the reason why you wouldn't want to, or some of the cons of an escrow account, is it removes an investment opportunity. Every month you're paying an extra, let's say, $200 or $300 to property taxes and homeowners insurance. Well, those payments aren't due, for instance, homeowners insurance, only once a year. Well, you could take all of that money and put it into another investment opportunity and create dividends back from that. If you're paying it to your servicer, you don't have access to that money, and therefore you're missing out on the investment opportunity. Another one is the idea of prepaids and setups. If you have an escrow account and you are purchasing a home, it is going to create higher prepaids and escrow setups, right? The prepaids are going to come in the form of your homeowner's insurance being paid at closing. Now, this can easily be offset by, you could pay your homeowner's insurance out of pocket before the closing, and you don't need to bring that money to the table. So if you wanted to put it on a credit card, if your insurance carrier will allow you, that removes this con, but it doesn't get rid of the setup. One of the costs when you have an escrow account on a purchase is going to be setting up your escrow account. Most investors will require you to have a 2-month buffer. So that means if your first property tax installment is due in 4 months, they're going to want 6 months of escrow payments ready to go so that you're ready to make that first payment. And if the cost of your property taxes has increased, there's a little bit of a buffer built in there for them that they won't have to, charge you extra or come up with additional money that they did not expect. Again, this is a little bit more that you have to bring to closing, and some borrowers are really tight on how much they have to bring to closing. So a con of an escrow account would be, having that, if you get rid of it, it's less cash that you need to bring to close. And finally, the idea of possible shortages. Now, we talked about no surprises and being covered as a pro. The con is that if you do have a shortage, that servicer is going to come back to you, and they're not just going to say, oh, don't worry, you were $1,500 short on your property taxes, we've got you covered. They're going to say, you were $1,500 short on your property taxes, how would you like to recover that money to us? You can either pay us $1,500 up front, or we can reevaluate your monthly payments and come to an agreement that over time you are going to get yourself back to even on your escrow shortage. So there is a potential for shortages, and that could mean that you end up paying more on your mortgage payment than you originally had intended. All right, so pros, right? It's automatic, you don't have to worry about it, possibly lower rates. The cons, you might need to bring a little bit more to closing. You're missing out on taking that money and investing it elsewhere. And there is always the possibility of a shortage, in which that might mean your payments are going to possibly increase. It's a lot of information. Escrow can be a confusing topic, but I'm here to help answer any questions you have. You can always visit yourmortgageguybrian.com, follow me at yourmgbrian, or leave a comment below and I'd be happy to answer it.